What's up, guys? How you doing? It's Matthew here with Digital Bankroll, back again to talk to you about digital money, cryptocurrency, Bitcoin, and more. And today, what I want to do is share with you a brief history of money and kind of where we started at in human history and where we are at today. So let me share my screen and let's talk about it here. So as you can see here on the right, there's a picture of the evolution of money starting from barter, going into gold and precious metals, gemstones, and kind of trade, if you will, metal coins, then into paper money, plastic money, electronic money, like banking online, PayPal, etc., and now where we are today with cryptocurrency. So, what I want to do is sort of walk you through that history and show you how we arrived where we're at here today and why we're here and why it's the most exciting time in finance that's ever existed in human history, in my opinion. And I think if you start to look and you start to ask the question, what is money? It leads you down your own personal rabbit hole of self-discovery and self-liberation and sovereignty, might I add, as you go through it all. So let's talk about some of that today and we'll walk through it and then see where we are at the end of it. So here's a brief history of money. Cool depiction of some ancient Roman coins there, among some other things, paper money, things like that, right? So if you could imagine back in the day when we had, let's say we had a cow like you see in the photo right there, and you wanted to go buy a house, for example, the guy might say, hey, I'll trade you this house that I built for 10 cows, something of that nature. And as you can imagine, yeah, that would work pretty well. That'd be cool, but it's kind of a hassle. And if the guy wants cows for the house, and you only have dogs or something else, now all of a sudden you got to go trade your dogs to get the cows, and you got to trade the cows to get the house, right? It becomes a problem. So people came up with a way to store their economic energy that they would create from their labor in something called money, which we call it today, right? And money is just a term that humans created that means a way to store our economic energy and then use it at a later date, right? That's why it's such an evolutionary concept in our history and why crypto as it is today is so amazing. And we'll get to all of that, right? So that became clear back in the day when people they don't want to trade a cow for dogs and to get a house, that kind of a thing, right? So we invented a thing called gold, an agreed upon scarce asset that everyone recognized as money and has a value no matter where you go on the planet, right? And now we can just say, hey, it's going to be, instead of 10 cows, it's going to be 10 gold coins for the house. And that was much easier, right? And eventually that gold became, different denominations of gold coins, and most famously probably the Roman coins that you may be familiar with. I believe they called it a denarius back then, if I'm not mistaken. And that was cool, but look what happened in ancient Roman coins. So let's do Roman coins here. Type it in for you real quick. And those are beautiful, but do you know what started happening as the coins progressed through history? Check this out. You can kind of see an example of that right there in the corners. It looks like a clipping of a coin. Let me get a better example of that here. Clipping. Okay. If you look, yeah, here's a really good example. This is called a clipped coin. Oftentimes in the ancient world, when we had gold and silver coins, a merchant would come into the king's manor, the king's house, and he would try to buy something from the king or perhaps another merchant. And he's like, hey, I'm going to go ahead and I'm going to clip a corner of your coin and keep that as a tax for the currency or for the kingdom that they're in on their currency, right? So that became a problem, and people were like, man, this sucks. And then all of a sudden, imagine if you have the clipped coin, and now you take that clipped coin and go to try to buy something that it costs a full coin. Now all of a sudden they look at that coin like, no, 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 like, hey, your silver coin, buddy, is not worth one full silver coin because it's clipped. It's been, another way to say this is inflated away by clipping it out. This is ancient inflation at play right here. Now all of a sudden people are like, shit, I can't buy the full money's worth of something if my coin is clipped. And it started getting clipped away. And of course, the kingdom would keep those clippings and forge them back into other coins and try and make some new money from that, as they would take a small tax from their citizens and people traveling through the kingdom or the town, right? So over time, it became a problem, and people started to realize, hey, they're kind of whittling our wealth away by clipping the currencies off and keeping them for themselves, right? They didn't like that. So now you fast forward to today, and if you notice, when we went off the gold standard in 1971, what happened, if you looked at the side, I don't have a coin on me here, but if you looked at the side of a coin on, let's say, a quarter, for example, it used to be 100% pure silver, okay? And now if you look, after 71, off the gold standard, we started introducing some additional metals into the mix of the quarters and the nickels and all that stuff and the dimes to not make them pure silver anymore. They're now mixed in with other metals, making them, another way to say inflation is, mixed in with all of that and the value inflated away because they're diluting the power of the currency. It's not pure silver no more. It's diluted down and now it's not worth as much as it would be if it was just pure silver like it was back in the day, okay? And so now governments and central banks also do the same thing with paper money. On top of that is they actually have just the ability to print money as much as they want at any time, right? And they do that in a controlled fashion, right? But they do have the ability to print money. And what happens is, just like in the coins, if you introduce additional metals into the pure silver, you dilute the potency of the purity of that coin away, just like it dilutes the amount of money in circulation. The money is worth less, okay? And so it's basically an invisible tax on your money that dilutes away your purchasing power over time. And there's a cool graphic for that. Purchasing power of the dollar. I can't type that so fast. Of the dollar over time. Yeah. So this is a good example of what happens with the dollar over time. Back in here in the early 1920s, it's been slowly eroded away over time. And now the dollar is really not worth much at all. Starting in 1913, when the Federal Reserve was created, they started printing the cash and whittling away the money over time. And as you can see now, it's worth pretty much a fraction of a percent of what it once was. That's why back in the day, if you look, like when my parents were growing up, they could buy a house for like 40, 50 grand or whatever it was. And now that same house costs 400 or $500,000, right? A 10x increase, or should I say a 10x devaluation in the purchasing power of your money. Aha. Okay. So we think about things that way and you start to see the world a little bit differently, right? So another way to see that is now we've entered into the era of cryptocurrencies, right? So cost of house with BTC. Okay, here is the perfect example of what a house costs in Bitcoin as the dollar's been continuously inflated away, the value of the Bitcoin continuously goes up, but it's an illusion because it's really just stayed the same. And the medium of exchange has changed over time, but the value of the house really is the same. So if you denominate the value of the house in a different asset, you start to see things differently, okay? So in 2016, for example, the price of this house was $288,000. 2020 is 328, and today in 2024, going into 2025, it's $434,000. But if you look back in 2016, that same house was 664 Bitcoin. 2020 was 45 Bitcoin, and in 2024, it's only 6 Bitcoin. So how is a house getting more expensive in dollars and cheaper in Bitcoin? That is the question you need to start asking yourself. And when you are able to understand that, then you truly understand the power of Bitcoin and cryptocurrency. Okay. So now that brings us to today, where we're at with the value of money. Is another really cool example of that. Same image is depicted differently, but that's what we're talking about here, guys. That's what we're talking about. And when you start to understand how this is working, then you start to see that by holding your money in something like a Bitcoin, it protects your purchasing power. Why is that true? Well, because just like, almost like gold, for example, Bitcoin has an unlimited supply. Only 21 million Bitcoin will ever be created in the history of all humans. Okay, unlike gold, gold is close to that, but you notice how every time gold starts to get a little bit too scarce, they start finding some more and a whole new supply is released into the market, right? Well, gold is not infinitely scarce, okay? It does have a slight level of inflation to it, so we're able to add in new gold to the supply each year or whenever there's too little gold or you want to, if you hold a lot of gold and you're able to introduce that into the supply of gold, you're driving the price of gold down, you're able to buy some cheaper, right? So it's very simple economic stuff here, but people just don't think about it this way. And that's why, again, Bitcoin is so powerful because, again, 21 million Bitcoin will only ever exist. Okay. And that's not accounting for the ones that have been lost or stolen or whatever, unable to recover the Bitcoin in a lost wallet, right? It's like at the bottom of the ocean or something like that, right? And you can't get it. So there's really less than 21 million Bitcoin that'll ever be in existence. And so that brings us to, asking the question, like, why is Bitcoin valuable, right? So what is the Bitcoin and what is the blockchain? So it really comes down to understanding how do you store your economic value, your economic energy that you earn from producing a product and the sale of that product, for producing a service and the sale of that service, or for doing labor out there, working, moving boxes, breaking up some lumber, some firewood, or whatever it is, right? How do you do that labor and then protect the labor, the economic energy you put out into the world in a way that it cannot be inflated away by a government or the collapse of the currency, right? Because if I go work 100 hours chopping firewood and I put that money and I store it denominated in US dollars, and then the US decides to go print a bunch of money like they did in 2021 and 2020 during the COVID-19 pandemic, what happens to the money? What happens to my hard labor that I worked and produced all that firewood for? Well, now that same exact money can just buy less, okay, over time as they continue to print and dilute the money supply. My energy that I worked for now buys less, okay? Versus if I decide to take that same economic energy and put it into that same money, we can call it, right? And put it into something like Bitcoin, now all of a sudden my energy is stored and protected and will always be worth the same amount, or depending on how you denominate it against another currency like the US dollar, worth more if you're transacting in dollars because they keep printing more and inflating the currency. But Bitcoin, as you can see, only continues to rise. Okay, so that is a little bit about the background of BTC and how you can store your value there as a unit of wealth preservation. Okay, and another thing to this too is, I don't know if we want to go that deep into Bitcoin in this particular video, but why not? Okay, why not? So if you wanted to see, for example, the blockchain, what is that and how does it work? Let's first start with an image, okay? The blockchain. All right. And you wanted to see how this works. Essentially, it's like this, okay? So you have these blocks, and these blocks store a series of transactions inside of them, and they're linked together in a chain that are agreed upon by everyone who mines Bitcoin and validates transactions on the network, okay? So you guys get what's happening there is now, really for the first time in history, we've had a way to solve the double spend problem in the world. So let me show you what that is, double spend problem. Okay, here's a double spend problem. All right. And it's this. So user spends, this showing in BTC. I want to show you in dollars. Let's see. Okay. So how, if I'm the fraudster and I send one BTC to merchant A and one BTC to merchant B, which is a copy of that same Bitcoin, how do I know that I've already spent the money and I can't send it again? Okay. So that's what the mining of Bitcoin does, is that people will use, in the beginning, we used our computers. Now they use ASIC miners to do this, and big warehouses full of miners running electricity, okay, to power the mines, to validate the transactions on the Bitcoin network that then are a chain of all the transactions in history that have ever happened on the blockchain. Okay, so that makes sense what I'm saying? So when you go spend your Bitcoin, all the people in the world who mine Bitcoin validate that, hey, user XYZ spent, 1 BTC on this. And they all agree upon that and validate it in a consensus together. And so now you can never, never rewrite that again. It is, in fact, written in stone, or as we say now, written on the blockchain for all of eternity. Okay, so let's solve the double spend problem. And now that's huge for removing a third party in the transaction process of doing a monetary transaction. Okay, so that is huge, my friends. That is huge, and that is the secret sauce of Bitcoin and why it is so amazing. Let me just go ahead and show you a little bit here, the actual blockchain itself. and let's see if we can get some live transactions coming through. So look at this. This is the blockchain, my friends. These are live Bitcoin transactions coming through on the blockchain right now as we speak. Okay, so you can watch some of these, and if you watch for a while, you're going to see some huge transactions come through, millions and millions of dollars. And that's another thing too, is Bitcoin gives you the ability to send money permissionless, any amount, anywhere, anytime, without asking permission from anybody. So if you want to send $5 million to your friend in Europe on a Saturday, you don't have to ask the bank if you can send the wire transfer. You can just go log into your Bitcoin wallet and send it, no questions asked. Okay, that's freaking amazing. That's powerful, and it's one of the most powerful tools, potent tools that humanity's ever seen. And that's one reason why it is so amazing. Let's talk about the latest blocks here. So you can see here's the actual blockchain itself. So now all the miners, what they're doing is they're competing to solve all the transactions on the latest block. And the one who does it, they win some Bitcoin for doing that. So now all the miners are incentivized to work together to mine Bitcoin, validate the transactions on the network, and keep it running, as well as keeping a history of all the transactions on chain. Okay. But anyways, that's enough for this video, guys. I could talk about crypto, Bitcoin, blockchain, etc. forever and ever. And just the coolest tech in the world. And I'll leave you guys with that. If you're liking this content, then drop me a comment below, like and share this video, and let me know if you want to see more content just like this one, and we'll do it for you. All right. So thank you very much, and I'll see you guys later. See you. Bye.